Hey, how's it going, everybody? Just wanted to reach out and go over our May monthly update. Just give you guys a little bit of insight on what's going on, how the markets are responding, how our models are doing, all that fun stuff. So, first off, wanted to just start off with a little bit of a story here that kind of ties in with everything that I wanted to talk about. Really exciting. I got called in for jury duty this past month, and some of you may have already heard this story and already heard me complaining about it. But basically, I get called into jury duty, and it was the first time ever that I've actually had to go in and was go through the whole process and everything. So I get there, there's about 50 people, and all I'm thinking was everybody already told me, Hunter, it's so easy to get out of jury duty. Like I've been in a ton of times, I've never gotten picked. That's what everybody always told me. So I'm thinking, okay, this is gonna be just a short day. I'll be in and out of here real quick. And all of a sudden, we go in and they're doing all the interviews and everything. And long story short here, lo and behold, I'm one of the 12 that they end up picking. And I did my best. I'm telling you, I told them that I'm really, really good friends with a lot of local sheriffs. I mean, what a bunch of different stuff, what I was trying to do to hopefully get dismissed off the jury, and they ended up keeping me. So just my luck, I had to go and do the entire trial. So luckily, it was not that long of a trial. There were only, I think, 4 witnesses. So the actual trial part of everything only lasted about half a day. It wasn't that crazy. So in my mind, I'm thinking, perfect. I'm going to be done with this in one day. We'll be out of here so quick and back to work is normal. Well, that didn't quite happen. We went into the deliberation, and in my mind, with the whole trial, I don't even know how it went to trial. The person that was being put to trial, it was so apparently obvious that he was guilty. It was an identity fraud case, and he had, I think it was 11 people's identity within his car, social security cards, debit cards, military IDs, all sorts of stuff. And he even admitted to having the stuff in there, knowing it was there. So I was just thinking, come on, what is there even to talk about here? Well, there were some people that, they wanted to be 100% sure that they make sure they have the right choice, because all 12 of us had to agree the verdict. And there was 2 people that were sitting on the fence for quite some time. So the whole remainder of the first day, we deliberated, nothing came of it. Whole remainder of the second day, we were deliberating, nothing came of it. I mean, I was going absolutely insane, losing my mind. I was getting so frustrated because we were just circling the wagon over and over and over and over, talking about all the same evidence that we had originally started with, just the same conversation a million times over. So I got kind of frustrated and I ended up going up and I put a T-chart up there, of all the reasons why the person could potentially be not guilty, and then all the reasons of why the person could potentially be guilty. So we went through all of the reasons he could be not guilty, and we talked about why they all made no sense and were just inherently false. So meaning that the only reasons left over were reasons that he could be guilty. And in my mind, it was just, again, so simple. But these people, it didn't really matter what you told them. They just didn't want the person to be guilty. So finally, after about 2.5 days, they ended up, this was after we met the judge again. We had to bring in what is the name of the person that records everything? But she had to come back in and go over, all of the different stuff that she had written down. It was such a long, tedious process. And they finally got off the fence and decided that the person was guilty. So long story short here, what I learned from that experience, you can't control what you can't control, right? I mean, I could not control what these people were thinking. I could not control what all the other jurors in the room wanted the verdict to be. All I could control were my own emotions and how I presented my ideas to the group. And until I kind of got that sense and started thinking about, I can't control what these people are doing, that's when I finally calmed down a little bit, because before I felt like I was in an insane asylum and just wanted to pound my head against the wall. So that being said, really relays well with what's going on in the market right now, right? We cannot control what we cannot control with this market. We cannot control Fed policy decisions. We cannot control inflation. We cannot control any wars going on. We cannot control COVID news. And we dang sure cannot control short-term market fluctuations here. So the more that we can just let that go, it's going to run its course. We can't have any hold on that. It helps kind of ease the pressure a little bit in my mind. So if we can't control that, then what can we control here? Well, number one, we can control our emotions, how we handle the emotional feeling of, potentially losing money in a down market. Again, losing money on paper, right? We can control how we diversify our models going forward. We can control our contributions to our investments and our overall financial plan, right? So again, I'm going to be reaching out to everybody here. We'll be meeting within, some of you will be this month, some probably the next month, do our semi-annual reviews. And we're going to readdress that financial plan that we've talked about a lot and just make sure that our emotions are in check and make sure that we're still on board with everything that we've previously discussed. But all that being said, again, I just want to give you a look into what's going on with the markets here in general. So looking at the charts here, this is all year to date. The Dow Jones here is down a little over 9% year to date. S&P is down 13.5%. The NASDAQ, again, we've talked about this a lot, the tech heavy index that's really gotten hit by a lot of this inflation and Fed tapering and all that sorts of stuff, down almost 23% year to date. And this is the crazy one, right? Bitcoin, which everybody was saying was going to react inversely with the actual markets and was a safe haven, better than gold, is what I had heard a couple of years ago, is down 32% year to date. So again, some of these indexes have gotten kind of pummeled, especially the tech heavy stuff with the NASDAQ here. But I want to also look at just a 1 month perspective here as well. So you kind of have an idea of what happened last month. Not as bad, not quite as much of a bloodbath as we have been seeing lately. Dow down just barely, just about 0.2%, S&P down 0.5%, NASDAQ down 2%, Bitcoin was down over 14% over the last month. So what does that mean for us and for our portfolios? Well, number one, the reason that I wanted to show these indexes, and actually I'm going to throw in an individual stock here to kind of expand on this story, is how much we talk about diversification, right? I'm going to give you some numbers on where our models are actually at and where you currently are at as well, being invested with us. And we're not hit 23%. We're not down 33%. We're not seeing these major crazy fluctuations. And that's the whole goal of the way that we invest, right? And I've talked to all of you guys about the core and satellite model, wanting to have the majority of our money well diversified in different ETFs and mutual funds. And that's our life raft. It's our buoy. Of course, we want to take advantage and capture upside, but we want to protect against the downside even more so. And then we have some individual satellite positions to take advantage of some short-term plays with some individual stocks. But being invested very, very heavily in tech, really a bad call this year. Being invested really, really heavy in crypto, obviously not a very good call this year. Being invested in certain individual stocks, I'm not a major proponent of that. So all that being said, kind of where we're standing with the Sierra Ridge models right now. For those of you that were invested in a more aggressive manner, kind of a more growth aspect sort of an account, down around 12 to 13% during that year. So right around with the S&P, maybe even a little bit better, not lost quite as much as the S&P has. Definitely not as much as the NASDAQ. We've well beaten the NASDAQ. Again, the reason that we're well diversified. Over the last month, the more aggressive accounts, they've been up right around 1%, kind of between that 0.9 to 1.1% range. So did really well over the last month. For those of you that are invested a little bit more moderately, not quite as aggressive, year to date down right around 10 to 11%, kind of in line with the Dow, losing less than the S&P. And then over the last month, up a little over 0.5%. And then those of you that are invested more conservatively, those accounts are down between 7 and 8% year to date. And then over the last month, they were up a little less than 0.5%. So again, as crazy as this year has been and as crazy as some of these numbers look, we're not getting smoked here. The diversified models are doing what they're supposed to be doing. And, we're staying afloat here. So one more thing I want to add in one other security. It just kind of helps this narrative that we have here. I want to look at Netflix. Okay, let's see. Yep, got it. Okay, so Netflix here. This is the reason why I am not a big fan of putting a large portion of money into individual stocks. Again, for heavy, more aggressive investors with us, I normally have them around 15-ish% of individual stock positions. For the more conservative, it's more around 3 to 5% of individual stock positions. But look at Netflix. What, 2-3 years ago, this was a high-flying, stock that everybody was excited about. Everybody wanted a piece of Netflix. It did great during the at-home COVID time. Well, look at year to date, down 67%. Over the last month, it's down. Up a little bit, up about a little over 4.5%. But this is the issue that I have with going really heavy into individual securities, and why I'm never a big proponent of it is, again, we can't control this. Nobody could control that the Fed was going to come in and increase interest rates, and that was going to have such a large effect against tech companies. Yeah, we can speculate and we can try to get away from some of those things, but if you were holding a large position of tech stocks within your portfolio and you saw some of, a major part of your portfolio go down 67%, that's tough to recover from. A heck of a lot tougher to recover from than your overall portfolio being down around 10 to 12%. So I'm always going to be a proponent of the core and satellite model. I'm always going to be a proponent of being well diversified. And I'm always going to be a proponent of everybody having a good financial plan, so that we don't lose, have our emotions take over during times like this, and we can stick to what we've worked on and what we trust in. So that's where everything's at. Again, just wanted to give you the update of how the markets are performing, how the overall portfolios are performing with Sierra Ridge right now. And again, I'm going to be reaching out to everybody here either this month or next, and we'll be going over those semi-annual reviews to talk about your portfolio specifically. So with that, if anybody has any questions at all, you always know where to find me. Always happy to chat about anything that you might have in mind. And I'm really looking forward to talking with everybody individually here over the next month or so. So take care, everybody, and we'll talk to you soon. Thanks. Bye.